Hi guys, welcome back to the channel. Today I'll be talking about something very important that you should do when you turn 18 in Canada, which is to open a tax-free savings account. Why? The name speaks for itself, tax-free. That means your capital gains are not taxed, your interests are not taxed, your dividends are not taxed. Why am I making this video? Is because there are a lot of young adults in Canada, all the ones that I worked with around. They are saving money, but they are saving it outside of TFSA, which your growth is taxed, right? And saving alone is not enough anymore. Saving in a GIC is not doing well anymore because interest is all has dropped. So that is why you should start at TFSA. TFSA allows you to also invest in the market. You can do self-directed investing, buying stocks, exchange traded funds, ETFs, whatever that you want to do, or individual stocks for that matter, right? Shopify, Nvidia, so on and so forth. But it's important to know that you want to start to have an account first, then you can build up from there. That's the problem with a lot of the Canadians here. They don't have it, they don't know about it, or they're like, hey, I didn't get the time to do it. Opening a TFSA account is very easy, right? Just go to your bank, speak to an advisor, you can open it for you. If you're a newcomer or you're working it out, you want to explore new options. There's always fintech companies such as Questrade or Wealthsimple, where you can just download the app, create the account, then start putting money in it and start investing. You can have multiple TFSA accounts across, you can have 10, 20 accounts with different portfolios. It's just that make sure that you do not cross the contribution limit. Contribution limit is set from the day you turn 18, right? And then it will increase, not to say increase, it will add up from year to year, depending on what the government has set for that particular year. So for a newcomer like me, example one, I just landed in Canada 2023. Therefore, my contribution room starts in 2023. It was 6,500, right? For 2023, 2024, 7,000, 2025, 7,000. So 14 plus 6.5 is about 20,500, right? But if you are, let's say, 25 years old this year, and then you turn 18 in, I lost my math, right? A few years back. So the contribution room starts at whatever the government sets in 2018 all the way to 2025. So let's say if you have a GIC of 30,000, just make sure you double check your contribution room on CRA, or you can call them and check because you have your SIN number. Then put in the amount into your into your TFSA so that it's tax sheltered, right? So moving forward or diversifying from GICs or normal savings, right? There's always a few ways to do it. If you need someone to hold your hand a bit, you can get an advisor or a robo-advisor on Wealthsimple, where they pick the investments for you based on your risk appetite. Usually there's a questionnaire that you have to fill saying that what's your loss tolerance and stuff like that, and then they will, of course, give you the relevant products that you can buy. But that, if you are very risk adverse, then you are not allowed to invest in things which are higher risk, such as sometimes individual stocks or funds which are more volatile. Sometimes can be like Nasdaq tech stocks, which can do very well and it can do very bad at certain time of the years, right? So, but if you are a long-time investor, right, usually it's long-term, so you don't really bother about the ups and downs within a short period of time. So another thing is, when you already open your account, you should commit to it, right? So of course, if you're buying a mutual fund, they really get you to commit. The first fund that I bought is a monthly income fund from Scotiabank, $500 minimum with a $25 minimum monthly, so that you grow at a pace, right? You can buy self-directed products, such as ETFs, you can buy stocks yourself. Those you have to open a different kind of account, which is called self-directed TFSA, right? Scotia iTrade, Wealthsimple, Questrade, these are the ones where you open, then you can start trading. Of course, you can trade in US dollars as well, but make sure that you've got to know that exchange rate and fees that comes along with it, right? Personally, myself, just to share an example, so you get an idea on where to start. I started off in September 2023 at Scotiabank. I opened the monthly income fund because I was, that time, a bit more risk adverse. So I put in about 1 to 2,000, then I have $50 every month, right? So that particular fund, the monthly income fund, since September 2023 to January 2025, fund has grown about 11 to 12%, right? Which is quite good, because GICs are giving you 3.5 to 5% on a high, an average market return that they say is good, annualized return would be 7 to 8%. So this kind of conventional fund, which was giving me 11%, which is quite good, right? It's a start somewhere. So then, after I went back to Malaysia in May 2024. I came back and tried to consolidate my finances a bit. Then I was like, hey, I think I should diversify a bit, be a bit more aggressive in my investment. So I adjusted the questionnaire, and therefore I started investing in a Nasdaq mutual fund. That mutual fund, also about the same amount of money I put in, with a $75 monthly recurring. From June 2024 to January 2025, about 6 to 8 months, 6 to 7 months, it has gone up about 20%. It's not a sure magic that you buy this one, it will make 20%. It so happened that in 2024, the market was doing very, very well. Even some normal Canadian stocks also were doing very well. Everybody's just going up, right? So we hope to see the same pattern this year, where things are still going up quite steadily. But as a long-term investor, right, you are young, you're 18, you're 19, now you have started, right? You're putting a $25 monthly recurrent. Don't worry about the dips and the lows, You just set it aside, right? Set your monthly contribution aside. Let it work its magic. Don't keep looking at it every week or every day, On the good days, yeah, you'll be happy, but then on the low days, you'll be like, oh shit, what's going on? But if you're a long-term investor, you're going to leave it for 2 to 5 years, you're going to touch it, right? Then let it grow. Because eventually, if you see most of the funds will usually go upwards. Right? After doing those 2 funds in Scotiabank, then I was looking through a lot of TikToks actually, and then and YouTube's, and they were talking about those 3-letter ETFs, right? QQQ, VFV, VOO. Yeah, I was so puzzled. Like, what the hell is this? How do I invest in this, right? So, in the end, I started investing in it. I just right after the Donald Trump election, I just dabbled in meme coins. So I opened an account with Wealthsimple, which is simple enough. You just have to provide the documentation to them. When it's open, then you can fund your Wealthsimple account from your big bank account. You just transfer money into it. Then you can start investing. So what I'm investing in Wealthsimple itself, personally for myself, is the VFV, the Vanguard S&P 500, the Canadian listed one, and my joint saving with my wife. I'm doing XCQT, which is by BlackRock, I think. It's US market and some international exposure as well. That one also was doing okay. I bought it at quite the right time because usually the market was dipping, and then when I was moving the funds, I waited for it to dip lower, then I bought in, so it was quite okay. This I was doing on Wealthsimple. I started on Wealthsimple because I was watching one of these other Canadian finance YouTuber. It's this lady. She looks like the lady from Fresh Off the Boat. I think I'll share her channel right here. She has very good insights, better coverage on how you should save and all. I started using Wealthsimple because of her, because there was a promo code on her channel. But given that now I am also on Wealthsimple, I have my own promo code. If you would like to start using Wealthsimple, do use my promo code at the bottom below. You will get $25 when you fund the account, and I will get $25 as well if it hasn't changed. So both of us get $25 to start your investment journey. It's a very simple a platform where you can open again a cash account, TFSA, RRSP, so on and so forth, and then also some crypto. If you want to play some crypto as well, it's a good platform. Wealthsimple, I would say. Do check it out. But back to the investments itself, right? Why am I telling the young people to do it? Because a lot of you guys don't know about it. I was talking to some of my colleagues who I work with. They say like, huh, what? They don't save or they don't invest. Sometimes it's lack of exposure on what's going on. If you don't know, means you don't know. Sometimes it's they know, but they do not have enough funds. But you can always save, right? Saving $10 a month is also a start. Putting aside $25 a month is also a start. Or 50. There's no shame in that, right? To start. The fact is that you started. And you start with certain funds that fits your appetite. If you like to mirror my portfolio, it's not the best, right? But it is also what I'm mirroring of people, because these are the very common ones which are doing quite okay. Don't take my word for it. Don't take any YouTuber's word for it. If you're already starting to invest, okay, let's say they talk about XCQT, VFV, right? The Vanguard S&P 500, or XCQT, the iShares BlackRock International, or the Nasdaq fund. Always what you do is take the name, Google it, Look at their fund profile. Look at its track record over the years. Yes, of course, we can see the graph is always up and down, but in the span of five years or 10 years, you can see, given it's up and down, it always goes up. It's always trending upwards, unless there's a big financial crisis ahead, which is like COVID, and you can see there's a dip. But since COVID till today, 2025, you can see it's gone up, right? And it's always at a very high level, but don't think of it that, hey, I'm too late. Don't think like that. Because 10 years ago, you could be thinking the same thing, or someone could be thinking the same thing, hey, fuck, it's already too high in 2015. But you look from 2015 to 2025, even with COVID factored in, it's gone up so much, right? Your job now, right, as a young Canadian, I know life is hard, tax is crazy, but you got to start saving and start investing smartly, right? You don't have to be aggressive. You don't have to buy everything under the sun. But do start with certain, conservative funds at least, or the VFV, which is very common because everybody's in it. The market cap is very big. Because another thing why I go into Wealthsimple is that Wealthsimple allows you to buy fractional shares, right? Because you see, VFV or XE, all these ETFs, they are like maybe $200, $300, $50 per share, which you don't have, right? So you may not have for the month or for the week, depending on how you want to do it. So that's where fractional shares come into play. Not all institution allows it. I know TD Bank allows it. Scotia Trading doesn't. Wealthsimple does, right? So that's one of the reasons why I kind of like slowly migrating to Wealthsimple, because of the fractional trades. So fractional trade is that, let's say you only have extra $20 for the week or for the month, or whatever the amount is. The share is $50, so you can buy $20 worth of that $50 share, which equates to maybe 0.4 something shares. So if you're doing this month after month, or maybe year after year, you keep doing it fractional consistently, right? Then you can see that share will grow. And then, of course, with the capital gains, it will also grow at a steady pace, right? Assuming that the economy is doing okay to good, right? Hopefully there's no bad things that happen in between. But even there's bad things that happen in between, continue buying, because market crash, whatever you buy, you will end up buying more. So that $20, you'll buy more shares because the shares are low, right? But the thing is, you have to educate yourself of having a TFSA fast, is because you don't want to save your money again outside of a tax shelter, then you get taxed for it, right? Or you are saving in something like just savings. Savings gives you what? Okay, my Scotia savings was giving me about 2%, 3% per annum. Then my PC money account giving you about 3.5 at the present time, 3.5% per annum. 3.5% is not enough to contra off the inflation. Inflation may be higher, right? So a very ideal return would be 7 to 8%. If you're doing 10% annually, that's considered very good, right? So that is where you start looking at different funds. If you think that you like the US market, you invest in the US market. If you like the Canadian market, you invest in Canadian, or you like to invest with a mix, right? The important thing is that what I'm trying to say is get yourself educated with what a TFSA is. You then start putting money in, choose some funds, start maybe conservatively. If you don't feel confident, then if you feel a bit confident, then dabble into it. But never over chase something, right? Don't go like start doing crypto. But crypto is never allowed in TFSA. Yeah, crypto is not allowed in TFSA. TFSA is more for those proper investment items, right? So those things I think you can research, or you'll be shown in places like Wealthsimple or Scotiabank itself, right? The reason why I'm very passionate about sharing about young people getting into investing properly and smartly at a very young age, because I was doing the same thing back in Malaysia, but I was very reckless. I was doing individual stock trading, right? And I was timing the market a lot of time. Timing the market is not investing, right? You're no difference from a gambler. If you're punting, you are speculating, then you're gambling, right? So since when I was in college, I did save a good amount. I burned quite a lot as well. I've lost about 100,000 ringgit, which is equivalent to 30,000 Canadian dollars, give or take, over the span of my trading career in Malaysia. Coming here is a bit different because from the East Asian markets to here, you have more opportunities. Being Canada, you have more opportunities to invest in the US market or internationally. It's just a wider and easier access to it, right? So my strategy has changed after listening to a lot of financial videos myself, watching a lot, but you have to always summarize what fits you the most, right? So what I did, like I said just now, I started off with something conservative, open up a bit to the Nasdaq and the S&P, which are doing quite well most of the time, and it was doing very, very well in 2024. I had very good returns. If you want to mirror my portfolio, as I said, I will put the fund link below. And if you are interested in doing self-directed investing, I would say Wealthsimple is actually really the way to go. I have not tried Questrade, but a lot of people have been moving from Questrade to Wealthsimple. I don't know. But again, if you are opening a Wealthsimple account, then do use my code. You will get a $25 referral. I get 25, you get 25. We both start with extra 25 to invest in, right? Then you can invite your friends, then you can make more money from that. Invite your peers. Okay, don't tell them to buy the wrong thing, but again, educate them on about how they should start a TFSA account, why they should do it. Share the knowledge that they should start investing early, especially when the economy, it's very uncertain. No matter where you are in the world, okay, you can be in Canada, it's very shit. In US, it's a different kind of shit. In Asia, it's a different kind of shit. So what you can do is just the shit you're dealing with, make sure you do and make the best decision to mitigate the problem, so you come up ahead of others, come up ahead of some of the difficulties, right? Start your TFSA as soon as you can. Move it to a TFSA so the government stop taking a lot more from you, which you have already given them so much, right? Of course, eventually, if you're earning more, then maybe RRSP will be in your sights because you want to reduce your taxable income. Again, I'm talking about TFSA is because younger adults are still with their parents. Your income may not be so high. RRSP may not be the best for you because there's nothing much to reduce in your taxable income. And because when you withdraw from RRSP, it's tax. That's not tax sheltered, that's tax deferred, right? So you'll still be taxed. TFSA, you can take out the money anytime, right? And then you can put the money back next year. The contribution room recovers the year after. So like a young adult, 20, 30, or 20 plus onwards, you are earning maybe from multiple gigs. Putting it in, taking it out, you don't need to worry about tax at all. That's why I'm talking about the tax-free savings account today. So I hope the young Canadians who are watching this video, or someone that you know who needs to watch this video, do share it with them. Tell them, hey, you gotta start. Right? Again, I'll share all the details I have in the description below. I hope you check it out. And that will be all for the video today. I hope I didn't babble too much into oblivion because I'm a bit hungry while doing this video. So my mind is not in the right state. I hope you enjoyed this video. Do click like if you like it. I hope to do more financial videos moving forward, but my knowledge is not as great, right? But again, I like to share this kind of knowledge with you guys so that you guys get on track as well. There are other videos in my channel for newcomers to Canada. This TFSA is also relevant to newcomers. Living in Canada vlogs. A lot more videos in the channel. I hope you subscribe to my channel and do view some of them. And I'll thank you for the support for watching this video today. And if you subscribe, thank you so much in advance. And I hope to see you in the next one. Bye.